please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
At commodities now, it has been a stronger day for that asset class as well, especially for the crude oil prices, where we have seen quite a bit of a turnaround come in. After 2.5% gains last night in the New York session, you have seen the prices gain up yet again. So it has been a good going in last 24 hours when it comes to the crude oil prices. Following quite close on the heels really is the base metal prices, where we did see multi-month highs, multi-year highs coming in for many of them. So even with a bit of a profit taking right now, zinc is trading near those 10-year highs. The best performance clearly comes in from the nickel prices. They gained 4.5% last night and are trading nearly 2 percentage point up in the market even at this point. So very strong gains is what we've seen in case of the nickel prices. Remember, there are various reports coming in on how the steel prices and demand are expected to stay firm going forward. Most of the brokerages have come out with a bullish outlook on the ferrous metals, and that is where nickel seems to be taking some strength from. Gnanasekar of CommTrendz now joins us to give his strategies on those commodities. Gnanasekar, hi. First of all, in the metal space and nickel, the kind of run-up that we have seen on there, what are you watching? How much of further gains are you estimating from here?
Manisha, like you rightly pointed out, I think the the tighter supply and also the steel outlook is sort of having a positive impact on nickel. And let's also not forget the surging Chinese imports and also the fund interest because of the EV background is certainly going to keep nickel prices elevated going forward. We did see a good correction earlier, sometime back, and it's been quite well bought into in that fall. So I think we are going to see higher prices from here. So it's clearly a buy on dips, and I'm expecting possibly 1,000 to be touched in MCX in the coming months.
Already trading at around 902, the percentage point of gains there. But you know, while the individual fundamentals are supportive, it also is the macro picture, because we have seen strong global data. The US dollar is on the weaker side. The global equity markets are raising as well. How much of that support do you see coming in for the industrial commodities?
Well, the dollar weakness, the commodity markets love dollar weakness because that's typically going to make the demand more at any point in time. But equity markets, I'm not too sure what kind of an impact it's going to have on specific metals. But overall, the metal complex will sort of move in tandem with the equity markets to some extent. But individual fundamentals will come into play. But on a macro picture, I think both might get decoupled at some point in time. But at this point in time, I think it's the fundamentals which are driving it.
What's your sense on the crude oil prices also? Would you say that I mean, a lot of people do say that we perhaps have done the high for this quarter. Would you also say that we've done the bottom for this quarter, or do you see further declines?
I'm not too sure about the decline part because, I'm only seeing more possibility of prices strengthening from here. Because we've clearly seen that, whenever it is dropped, Saudi comes in to sort of talk prices up. So that will continue. I think the rhetoric might continue whenever we see any kind of a fall on the back of rising production in the US. So I'm only seeing, gently prices moving up towards $70 in the coming months or in the coming quarters. I'm not the camp which expects further declines from here.
How also are you looking at the precious metals as a space? Because we've seen some support come in there, while of course it continues to be shy of those resistance levels. Every time we try and touch those 1350, 57 kind of levels, there is that profit taking that comes in. But for a near term, for slightly longer term, what is the range that you're working with for here?
Well, first we have to understand that the inflationary pressure was earlier undermining gold prices because a rate hike would sort of make dent the appeal of bullion, especially gold. But now it's exactly changing because as the chances of rate hikes are more and inflationary expectations are building up, now people are moving towards gold, and also the Bitcoin flop is making investors move into gold as well. So the investment demand, which is missing, I think will typically catch up. So fundamentally, it's a confluence of factors building up for gold. So I'm seeing clearly, gold prices breaking out of this very long-term resistance at 1375 and possibly moving into the next zone of 1400 to 1500, in the coming quarters.
All right, it has been a good day and continues to be so, and we have all buy calls coming in from Gnanasekar as well. Thank you so much for joining us with your strategy. So on a very positive note for this asset class as well,